Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, look, I do want to stick a little bit more to the charts and the general makeup of what we're seeing in the precious metals sector. A lot comparing the charts of, well, the underlying gold silver price, as well as even GDX, GDXJ. You can even argue SIL. However, I don't think that chart has quite been as strong as GDX or GDXJ, but at least going back to Q4 of last year. So we're talking almost 8 to 9 months now. We have seen, in especially the gold and silver price, two higher highs, and it looks like another higher low being formed as long as we do get the turn that we are starting to see this week, as long as that does take hold and start moving up from here. And you look at GDX, GDXJ, those have also put in a couple higher highs, maybe a couple higher lows, again, depending on the follow through on this week's action. But boy, oh boy, the juniors and still a lot of stocks, they're just not getting a whole lot of traction. Even on the back of good news, quite frankly, we're still seeing low volume and a lot of selling come into stocks when they do issue news. It almost seems like a big dichotomy here of bull market action in the metals price, but not bull market action in at least some of the smaller, or all of the smaller stocks, let's say. What do you take away from this environment, Jordan?
Well, looking at gold specifically, I mean, I hate to repeat myself and always say the same thing sometimes, but you're not in a real bull market in precious metals until gold takes out 2050 or 2100. If you look at fund flows in the sector into the mining ETFs, but also into the gold and silver ETFs, I mean, the fund flows, they have not been that significant, even though we've had this rally. So there hasn't been that much money, at least new money, coming into the sector, which on the one hand, it's a really good thing because you don't want all this money to come in and then the prices not to, they fail to move up and begin a real new bull market. But you really do need that surge of money coming into the sector to really signify or confirm that it started a real bull market. I would say, yeah, there's a lack of new participants coming in. Now, with respect to, you drilling down further, with respect to the minor ETFs and the fact that they're lagging the metals, people just forget this constantly. Think about in the last 3 years how much costs have gone up. So $2,000 gold and $27, $28 silver 3 years ago compared to today. If you look at the margins, I mean, I'm just taking it, just thinking off the top of my head, $2,000 gold 3 years ago. I mean, that could be 2,400 or 2,500 gold today in terms of mining margins. Same thing with silver, like $27, $28 silver 3 years ago. That could be, I don't know, 35 or 34 today. So there's a big difference in the margins. And so that's why when you see gold and silver, they rebound, they start to move, but then they fail to break resistance and then they sell off. That's why they get hit so hard, because you're looking at gold in the 1900s now, and that's a huge difference compared to 2 or 3 years ago. As I said, I think that explains why a lot of good news from companies can be sold and why they don't continue to move up after that news. It's also because the market, in most cases, is able to discount that stuff in advance. It has an idea of what the studies or what these resources might be. So it discounts it in advance to a large degree. So I think those are some of the reasons that explain why we are here right now, and why the miners and the metals are acting this way, and why sentiment just remains subdued or not great.
Well, Jordan, I hear the point you're making as far as the inflation compressing the margins on producers, but when you look at GDX and GDXJ, as we just said, they've made higher highs and higher lows. They actually did outperform the metals. GDX and GDXJ were actually up 65% when gold was only up 25 to 30%. So you could make the point that while the margins and the producers have been compressed, they did outperform. A lot of the stocks I follow on my watch list are up double or triple from where they were on their September lows or October lows. So the producers, even though their margins have been compressed, did outperform. That doesn't seem to really relate, though, to drill plays, putting out news and drill results, and people selling it off, even when the metals are at a pretty high area. It seems like it's more of a sentiment thing, and that even if you can factor in the inflation difference from where it was a couple of years ago to present, these companies are, a lot of producers are still making money, but that is not translating down into explorers and prospect generators and developers and people with big drill programs. They're not getting any love at all. It seems more like the initial point you made, that there's just not a lot of investors in this sector right now, and maybe it's going to take that breakout. Don't you think there's a difference in a drill play putting out good news and being sold off as a liquidity event versus a producer and their margins?
Yeah, that's a good point. I mean, there definitely is a big difference, but there's still a lot of the producers that I'm watching. And granted, I don't watch everyone, but I'm just looking at my screen right now to just double check. I mean, a lot of the ones that I'm watching, they have been hit hard in the last month or two, where it seems like, oh, they made this move and then they're giving back a lot of that move. So I just think there's very few companies. I mean, there's some, but I just think there's, even amongst the, producer segment, I still think there's more that have, been hit hard in the last month or two, despite, the good rebound that they had for 6 or 7 months. But that's a good point that you made, that obviously it's hurting, the explorers and the developers more so. And that they're also victims of sentiment, because if sentiment is as we say it is, and you don't have, sentiment hasn't reached like bull market thresholds, then obviously there's not enough capital coming into the sector. And so this is a smaller sector. And so the capital that's coming in is mostly going to favor producers. And yeah, that definitely impacts the explorers and developers most. And so as far as their, I don't have the data. I'd love to see an analyst report or some charts on valuations, but I definitely think that if you're looking at, what percent of NAV the explorers developers are trading at, that their valuations have definitely been hit more than the valuations of the producers.
So, Jordan, I guess big picture here, as much as we talk about we don't see new investors or this to the moon narrative that, in all fairness, a lot of investors are looking for, right? There are a lot of investors, and those included, that look at these juniors, even mid-tier stocks, that want to make some big money. One of the problems that I keep thinking about within this gold sector or even silver sector is that there's not a whole lot of innovation. I haven't really seen anything new being done by any companies that draw in that sort of excitement outside of, let's say, battery metals, some of these critical metals that we are seeing different types of investors come into because it's being used for something different. That excitement narrative, to me, just isn't in the gold and silver space, which isn't a bad thing, but don't we need to understand the type of sector and the type of stocks that we are looking at here? These aren't innovative stocks. They are so dependent on an underlying asset which they control zero pricing power on. We're not going to get these to the moon moves unless gold or silver go to the moon. So then why are we expecting a flood of other investors to come into this space?
Well, and I would just add that also supply and demand have no impact on gold and silver prices, even though people talk about that stuff quite a bit. Like it's all investment demand that follows real interest rates, if I'm dumbing it down. But no, you make a great point, and I would say, well, it's not as exciting as those other sectors. How are we going to be able to get new money to come in? It's one answer: higher prices. I mean, it's just as simple as that. You start to see higher prices, more money will come in the sector. And obviously, there's this threshold I keep talking about, gold breaking above 2050, 2100. That will signal a real new bull market. And then you'll get lots of money coming into the sector quickly. It'll filter down to the juniors, and then it'll be a completely different situation, than it has been in recent months in the last couple of years. I mean, I've been talking about how there's a similarity to gold has some similarities to the stock market in the early 80s. And interestingly, if you look at the stock market in the early 80s, I think in 1981, it even made a new all-time high. I mean, at least the S&P did. And gold had already come back I think the CRB, I'd have to look at it, but it may have peaked in 1980 or 1981. But there was a point in time then, even before 1982, where the stock market made a new all-time high, or it was trading around a new all-time high. Commodity prices were, gold and commodity prices were, they just started to come back significantly. But the sentiment in the stock market, I mean, it was still really in the dumps despite those numbers, and the fact that the stock market was just really close to like this epic multi-decade breakout. And obviously, there was a huge breakout in 82, and then all this money came rushing in, and so sentiment got really hot, and so there was this great cyclical bull market until the 87 crash. But my larger point is that, interestingly, gold is very similar to where the stock market was in the early 80s. And I think the sentiment, that's just one piece of evidence to confirm the similarity between the two. And obviously, as I said earlier, fundamentally, there's a big difference between $2,000 gold now compared to 3 years ago. But nevertheless, you need to see that break above 2050 or 2100 to trigger a new real bull market, and then higher highs and money coming in and people getting excited. And we're just, until we can break that threshold, new money is just not going to come into the sector. I mean, it's been the case in recent months, and in the last year or so, that's just the reality. I mean, unfortunately, I have to keep dumbing it down to that point.
I think you're right, though, Jordan. It's true. That's what would bring in more excitement, because unfortunately, we're just not seeing a whole lot on the company front that is that exciting. Even if companies increase production, well, that they are making more money, but that money's marginal. We're not seeing doubling, tripling of production. Or maybe we are on a small scale, but small scale mining doesn't draw in major investors either. So it's one of these aspects that I think you're right, dumbing it down and simply saying, look, if we want excitement in this sector, well, we're going to need to depend on the underlying metals price and a major breakout in that could, or at least should, bring in some more investors. Other than that, yeah, we're just watching companies slowly grow resources, and unfortunately, it seemed like get less value for those resources. I just keep going back to GDX. Man, when it first came out, there was a lot of enthusiasm around it. It was a new product. Now we're more than a decade in, and well, that recent high that we saw well over a decade ago, we haven't even come close to it. Who knows? Maybe we will, and that will be exciting, but it's still a long way off. Either way, look, these underlying charts are at least short-term bullish. Let's see if another higher low that looks like it's being formed this week is going to carry through. Jordan, thank you as always for your time, buddy. Chat next week.